in this investment series so that you get a true understanding of what the stock market is, what to do, and how to use it to your benefit and build wealth. Hey honeybees, welcome back to my channel. Or if you're new, my name is Sierra. I do videos on finance and lifestyle. I work full-time as a mortgage loan officer, and I have helped hundreds of people to become wealthy through acquiring real estate and buying homes. So I take what I've learned and I teach it to you guys in hopes that you will build wealth too. Okay, so today's video is going to be about something I get asked about so much, especially lately with the economy going crazy, and that is investing. It's just one aspect of building wealth, but it's one that can seem obscure and complicated, and as a beginner who wants to get into investing, it can be daunting. So luckily for you guys, I have recently delved into the world of investing in the stock market. I am completely a newbie. I am not like a financial advisor or anything, so I just wanted to give you guys some information and knowledge and a perspective from somebody who went from knowing not very much about the stock market to someone who is learning and really getting their groove with the stock market. So in this video, I'm gonna clear up all of the mystery about the stock market for you. I'm gonna break everything down in this investment series so that you get a true understanding of what the stock market is, what to do, and how to use it to your benefit and build wealth. So before we get started, I want to give a huge shout out to the sponsor of this video, which is ShopTagger. ShopTagger is an app as well as a browser extension that notifies you the second an item goes on sale or it comes back in stock. I've talked about ShopTagger before, and it's something I have used for a while. And this is a really good way to save money because you get alerts of when things go on sale, in addition to being able to customize your shopping experience. But you probably are wondering, what does this have to do with investing? I love using ShopTagger, and what I've used it for is a way to save money, and I can then use that money that I've saved and invest it to make more money. ShopTagger has been super helpful in alerting me of when items that I really want go on sale, and that way I'm able to get them for a cheaper price than I would if I was not using ShopTagger. So all you need to do to get started is to download the ShopTagger browser button, and then head over to one of your favorite stores and click the button or the slider when you see an item you'd like to save. One cool thing I love about this is that you can get notifications via email or push notification on your phone. And this notification will let you know when an item that you saved either comes back in stock or it goes on sale. It's a really great way to plan and organize your shopping because you can create wish lists, and now you can even view coupon codes at checkout. So this is another way that you will be able to save money, and then that's money that you can then put into investing if you choose. So definitely make sure to click the link down below to check out ShopTagger, and I guarantee you will love it. Okay, so let's just get right into it. I'm going to start at the most basic level, and I will continue to give you guys more information as I go throughout the series. So I will also make sure to bookmark the different parts of this video, where if you don't want to see a certain part or you want to skip over it, you can reference that below in the bar, or you can reference it in the description box, so you can jump around if you need to. Okay, let's go. So the first thing you need to know is what a stock is. A stock is essentially a share of a company. Basically, if you look at it like a pizza, a share of stock is a slice of pizza or a little piece of ownership in a company. That's all a stock is. And you can own parts of the company through shares. One share means you're basically getting one slice of ownership in the company. There are different types of ways that stocks get classified, and one way is the index. Many of you have probably heard of the Dow Jones or NASDAQ or the S&P 500. Whenever you go to your stock app, you can see that it keeps track of those. Whenever you watch the news or watch TV, those are the indexes that they follow. And that is just a general way to keep track of how the stock market is doing by category. So let me break down to you what each index is and kind of what that means. You've got the S&P 500, and that represents the 500 leading companies. Then you've got NASDAQ, which in general is riskier tech stocks. Your Amazon, Apple, Tesla, Facebook, these are all in the NASDAQ category. And the Dow Jones, which tracks 30 large publicly traded companies, as well as the NASDAQ. In general, the Dow is representative of how the market is doing as a whole. So you've got Dow, NASDAQ, and S&P 500. Those are the basic indexes that you need to know. Now, before you start investing, there is a variety of things that you need to do. The first thing is to make sure that you are financially secure. Investing in the stock market should be something to build wealth, not something to make you get rich quick, not something that you're using bill money, because you could also lose it. So this needs to be money that you put into the stock market that if you lost it tomorrow, it wouldn't affect your lifestyle. That's typically why more wealthier people tend to do more investing in the stock market, because they have a lot of recreational funds that they can do that with. And if they lose it, it's not going to affect their lifestyle. So here are some ways that you can make sure you're financially secure before investing. The first thing I want you to do is to have an emergency fund. This is super important because if you have a financial emergency, which is bound to happen, it's Murphy's Law. If you have a financial emergency, you do not want to have to go and cash out all your stocks in order to cover it, because the benefit in the stock market is being able to keep your money in there to let it grow. So the first thing you want to make sure you have is an emergency fund. You also want to eliminate or reduce your debt. And this part you can be strategic about, because if you're investing into the stock market, your return is not guaranteed to be more than the interest rate of your debts. Be mindful of that. Try to reduce your debt as much as possible before you start investing. Next, you want to make sure that your job is secure. This is another way to make sure that you are financially secure and you don't have to cash out your stocks prematurely. If you are kind of teetering on if you're going to have your job today or tomorrow, or if you're going to have a lower income because of the pandemic or because of whatever, then now may not be the best time for you to get involved in the stock market. Also, make sure you have adequate insurance. Insurance is so important because it's another one of those things that allows you to avoid from touching your stocks and that money once you've put it into the stock market. The stock market doesn't benefit you necessarily if you're putting money in and taking it out the next day. It's very rare that a stock is going to surge that much in one day and you're going to make a ton of money. So it's better if you have financial security and stability, and that way you don't have to worry about messing with your stocks or having to sell them and cash out. Now, say you're financially secure, you've got your emergency fund, all your insurances, you've got little to no debt, you are ready to roll. Not so fast. There is another part of investing before you start investing that you really need to do. And that next big part is research. Research. You're not gonna go and just start buying up a bunch of stock of your favorite companies. You are gonna need to research every company that you are interested in and or what company's stock that you should buy. Okay, so you first need to know that the company that you're gonna choose to invest in is sound and financially growing. So before you start investing, as let's say you want to invest in McDonald's or any company that you want to invest in, there are key things you need to know about this company before you put your money into their stock. You need to know that the company is financially sound and growing. It offers some kind of product or services that are in demand. and that it's in a strong and growing industry. When you buy a share of stock in any company, that represents one slice of that entire pie, which is that entire company. The value of that one share changes. It can go up, it can go down. But if you have a company that is constantly making money, making more money, then that only increases the value of that share that you have. So you want to make sure that the company is doing well financially and that they're exceeding their sales goals and that they have a product that is in demand and that they are making money, because that's going to make you money. You also need to pay attention to financial news. I downloaded Yahoo Finance, that app, as well as some other apps that will alert me when anything major happens in the economy or with companies. So if a company is developing a new product, that may be a signal that they're about to start making more money. Or if a company CEO says something derogatory or does something and people start boycotting, you know that that company is about to start losing revenue. And so maybe that's not a company you want to invest in. Paying attention to what's going on in the news financially, as well as government policies, because government policies can affect the economy. You want to pay attention to supply and demand. A good example is the pandemic. When coronavirus hit, you saw certain stocks plunge, and I mean plunge. So think anything that involved people having to be near each other. So airlines plunged, while other stocks in other industries soared, such as Apple, social media, Facebook, things like that. Things that people were still accessing during the pandemic. Netflix went up. A lot of people were at home watching Netflix now. So you have to pay attention to government policies, as well as supply and demand, cause and effect, as well as the financial news. So here are some key questions to ask when you are looking at buying a stock. Is this company making more net income than last year? You can find this out on Google. All these companies that are publicly owned have this information widely available. So you want to find out, are they making more than they did last year? Is the company issuing press releases on new services or new products or new business deals? Is there a company that's teaming up with a popular celebrity to create a product? If so, their sales are likely going to go up. So you have to pay attention to those sort of things and ask yourself if the company is producing, and are they producing services or products that are in demand, or you can forecast in the future is making more money for the company. Is the industry strong and dynamic? You can think over the past 10 to 20 years, technology has advanced widely. So certain industries or certain products, certain things that used to be valuable are not anymore like they used to be. If you think about it, I don't know how old you guys are, but when I grew up, we had videotapes, we had VHS. So that was the technology everyone was using. And then it went to DVDs, and then it went to Blu-ray, and now pretty much everybody watches like Netflix and does streaming. So some of the old school things in the tech industry may have been strong at one point, but they're no longer strong. You want to make sure that you're always staying on the cutting edge of what is new, what is now, and what is going to be hot in the future. So you want to make sure it's in an industry that is strong and is dynamic. Now, how do you actually start trading and investing and buying stock? There are a variety of different apps that people are using nowadays. A lot of people are using Robinhood now. Robinhood has become huge now. I really like Robinhood. Now that I'm more knowledgeable about investing in the stock market, Robinhood is a little bit more informative to me, but starting off, I more so used Stash. It was more user-friendly and I just felt more comfortable with it as a beginner. And I also like how they have an auto stash option, which means you can put your stock purchases on auto pay or auto buy, so that every week or every month you can invest in certain stocks any amount you want, and it just goes on auto mode, and you don't have to worry about actively going in and buying stock. I advise using just an app on your phone, either Stash or Robinhood, and I will put the link for both of those below so you guys can check those out. Because I want you guys to take everything I've given you in this video and use it as homework. And I want you to have your homework done and your assignment done before the next video in this series, the part 2. First, I want you to go through the steps of making sure you are financially secure. Once you've gone through those steps, I want you to start doing some research. Make a list of 10 companies you feel like you want to invest in, and I want you to go through and do the research for each of those, finding out, what their earnings are. Find out, are their earnings increasing? Are they decreasing? Is the product in demand? Is this something that will be in demand? Maybe it's not in demand right now, but it's going to be in demand in the immediate foreseeable future. Do all your research, and really a lot of it is common sense. You use your common sense. Is this company innovating? Is this company run by a good CEO? Like, do they have a product people want? Do they have a product people will want? So I want you to do that research for not the top 10 companies. I'll say do it for the top 5 companies that you want to invest in. Take the top 5 companies you want to invest in and do your research on each of them. And I want you to determine, when you're done with your research, which companies you will or won't invest in and why. Now, by the time you've done that, I will be back with part 2, and I'm going to walk you through the steps of actually getting started with investing. So stay tuned. I'm super excited about this series. Definitely go click the links below and check out Stash and Robinhood, because those are the main apps I'm going to be using and walking you guys through. And start getting on there and just playing around with it. Start learning the app, start researching companies, and keep your questions written down so that when we get to part 2, I'll be able to answer some of those questions in that video. Also, make sure to put your comments and questions below in this video, and it's going to help me know what information to give you guys in the next video. I hope that you guys like this, and if so, it's a series that I can continue and do more and more videos as we walk through this journey of investing in the stock market together. Thank you guys so much for watching. I really appreciate it. I hope you learned something. If you did, please give me a thumbs up. It lets me know you liked the video. Also, don't forget to subscribe so you can get notified of my future videos, and hit the bell button so you can be one of the first to see it and you won't miss out on any new videos, because we know YouTube be playing around with notifying people. So make sure you hit the bell button so you always get notification of when I upload a new video. Thank you guys so much for watching. I love you to the bank and back, and I'll see you in my next video.